Welcome to the podcast. I'm Damanick Dantes, founder of Dantes Outlook, a boutique investment firm. Our team helps private clients build and manage multi-asset portfolios worldwide. Today, we're focused on Latin American equities, which have quietly been one of the strongest performing regions in emerging markets over the past year, although they still trade at meaningful discounts to their developed market peers. And joining me now to unpack that is Mauricio Alvarez. He is the Chief Executive Officer and Portfolio Manager at OTG Asset Management. And what I want to do today is structure this around three core lenses. We'll talk about the macro, top down, some of the fundamental approaches that Mauricio uses, and some of the quantitative signals that we're seeing. And then we'll bring it all together in terms of risk and positioning for investors. So let's start at the top on the macro side. Mauricio, thanks for joining us. And zooming out, LATAM has historically been one of the most macro sensitive regions. And what are you thinking about in terms of the interest rate cycle relative to the US and where we are and how that's structurally supported for LATAM equities?
Sure. Thank you, Dominic. Thank you for the opportunity to talk about the region. I'm glad to be on the show. Latin America has been one of the few regions that benefit from this macro mix. If you want to talk about rates, FX, commodities, global liquidity. Right now, there's a high real rates that's occurring in the region. There's a very disciplined central banks that are doing the right job, I would say. We have to remember that LATAM central banks were the first to hike interest rates after COVID, way before the Fed, and now they are the first ones to cut interest rates. So that's giving them credibility. The FX is supported by positive real carry, which is proving fiscal anchors and commodity terms of trade. So I would say that right now, LATAM is less dependent on foreign influence than in the past cycles, and commodities are tailwind. But the real story is here, the macro maturity that they're being showing through this time. So I would say central banks are more independent right now as were in the past, and the policies, the monetary policies that they took were way ahead and in a disciplined manner that other developing markets and emerging markets as well.
Yeah, I think that's a key theme that Latin American central banks were early on in this inflation cycle, right? It's probably much more room to stimulate rather than tighten. Would you agree with that?
Yeah, definitely. Right now, there's like I said, they're the first one that are cutting rates, even though the rates are still high in most of these markets. They are starting the easing cycle as well. So that's going to be positive also especially for the equities.
Yeah. And then shifting to FX, one of the main, connectors with rates, is this mostly tied to dollar weakness, would you say, or have you been seeing some local currency strength or perhaps stability?
Um, I would say that FX stability is the oxygen for Latin equities.
Hmm.
So it allows multiples to expand and foreign capitals to return. So, for example, Brazil and Mexico and the Andean countries, which are comprised per Peru, Chile, and Colombia, have seen FX stability, uh, not runaway appreciations. So, I would say the stability on the FX front is reduces the equity risk premium and attract global allocators. I've seen the FX. The dollar has weakened prior to when they enter into the war in Iran, and then the dollar is strengthened. But now again, all the currencies have all the Latin America currencies have appreciated. I would say close to those were the pre-pandemic levels. So that's a good sign. They're showing stability, and that's a good start for the economies.
Definitely. And then some of the work that we do, we look at currencies in regards to their momentum. So how fast are they moving? And then also relative to their long-term average. So are they valued relative to the dollar? And we've actually seen a lot of dispersion within Brazilian real, the Mexican peso, in terms of like they haven't really broken out over the long term. So there's still a lot of just oversold opportunity, not only on the equities, but on the FX side as well. Are you seeing that as well when you kind of, work through your models?
Yeah, we're seeing that a lot.
Mhm.
I would say, like I said, the stable effects plus a lower inflation in these economies, the early rate cuts, the stronger domestic demand, uh, higher earnings, higher multiples. All of those are good signs for all these countries.
Definitely. And then on the commodity side, we're seeing sort of two tailwinds, if you will. The ongoing reshaping of the global supply chains, right? Nearshoring, and then also the commodity cycle, which seems to be at a trough. How are you thinking about that in terms of the companies that you look at and the regions that you explore?
Yeah, definitely. I would say the commodities always was the bread and of the region. That's always very important. But now we've seen that's also on the commodity front. There's an energy transition on the on the metals and minings. Copper for electrification, lithium for batteries, for example. And countries like Chile and Peru are very focused, and they have huge reserves of copper and also lithium, like Argentina, Bolivia, Chile, big reserves also. So all of those are going to be a huge help going forward for this energy transition and metals that's happening nowadays.
Great. And we all know, the opportunities are immense, but it's really the companies that are set up to win in that environment that obviously make it to your portfolio. So let's delve more into the specific sectors and companies that you look at and the fundamental approach that you take. Taking a step back, talk a little bit about your background and how you develop your approach and just explain it for investors.
Sure. Yeah. Well, basically the OTG philosophy is built on the ground research. We do like an active stock selection and exploding market inefficiencies across Latin America. Uh, we're based in the region. The whole team is based in the region. So that gives us a direct access to the political, cultural, and economic dynamics that the global manager often miss. Um, so we basically we do like a top-down approach. We really see uh, what's going on the bigger picture in the US, China, and then we decide to and go on the bottom side, which companies can benefit on what happening on the structural themes that's happening in the region. So, for example, nearshoring is very important for Mexico now. There's a huge opportunity for Mexican companies to take a good approach of nearshoring. And like I mentioned, all the changes on the energy side are helping those companies who produce copper, lithium, and countries like Chile, Peru benefit from these companies. So all of these give us like I think it's stock picking is essential. We manage an ETF, which is an active. So we focus on those companies who have undervalue and that are not in the radar of everyone else. On the ETF front, we want to show that there's more to the region has more to offer. It's not just Brazil and Mexico. We invest in Chile, Peru, Colombia, now Argentina. When the fact that we are on the ground help us to visit the companies, visit the countries we invest in, and pick those companies that are not in the radar of everyone else. companies that trade locally, that they trade in the local stock exchanges, and they can benefit of all what is happening right now in the region.
Great. I like that off the radar, but on the ground. I think
Correct.
that's a good point. And I like the point of, the benchmark, as we know, it can be very concentrated when you think about EM, right? They automatically target the largest players, but there's a lot of underlying strength. I saw Paraguay recently tied with the Nasdaq to enhance its exchange framework, which is great, right? I think that offers them more access to the international market. Are you seeing that as well with some of the regions that you look at?
When you were saying Paraguay, you mean the Paraguay, the country?
Yeah, their local exchange, I think, had tied with the Nasdaq to increase its, I guess, functionality. So there's been recent steps across different regional exchanges to broaden the investor base.
Yeah, yeah, definitely. I think the there's also there's more involvement in different countries, like I say, Chile, Peru, Colombia. They created their own stock exchange. They're trying to do to do that to compete with Mexico and Brazil. Mexico and Brazil are the
Ah,
biggest, the most liquid markets, and they are also trying to have one only exchange in Peru, Chile, and Colombia, and they're working with that as well. So I guess internally all these markets are growing more than before, and that's good. That's a good sign for the markets, and being able to tap into these companies, like I said, that are unknown for the rest of the investors. These local companies have a huge potential. We were able to tap in some of those, and we are glad that we did that. And they are very solid, and also they locally they are growing a lot internally in those countries, right?
yep. And then in terms of, we've seen valuation, that story for EM for a long time. And as we know, some things can be cheap for a reason. How do you distinguish value from quality in terms of your stock selection?
Yeah, no, valuations have been cheap for a long time. Right now, the PE ratio of most of the emerging markets, but I would see the Latin markets are cheaper than some emerging markets. For example, Brazil trades at 11 and 9 times earnings.
Hmm.
Mexico's around 14, Chile, Peru 12. And whereas the US is close to 21, India is 23%, I guess. So Latin America has also a lot of room to grow in terms of valuations. They have been cheap for a long time. And I think that shows a great opportunity now for investors. Um, they, I would say valuations help, and there's a macro growth story behind that. It's not just the valuations are cheap, but the whole region has demonstrated a lot of resilience during hard times.
Hmm.
We've been into for the last 6 years. There were a lot of shocks. First was COVID, and kind of the narrative was like Latin America will have like sovereign defaults or massive corporate defaults, and it didn't happen. There were some few, but not big ones. Then we had the Ukrainian war, and that also didn't have too much effect. The aggressive hike of U.S. interest rates, which implicated debt problems, that didn't happen. Trade tariffs noise was also huge, and the narrative was to export will collapse. That didn't happen. So, and now we have the Iran issue,
Hmm.
and we're not sure how that will develop. But I would say that resilience is the name of the game for the region, no? And the
Yeah.
actions that they took for all those shocks were very responsible. Like we said, there was the first two rate hikes. Monetary policies were very proactive. So, uh, besides valuations, I think there's something behind of the story in Latin America that it can bring a lot of opportunities for investors.
Definitely. And the big elephant in the room is stability, right? Not only from a currency and earnings perspective, but political. I know we have a wave of elections this year, right? Can you walk us through what's going on there?
Yeah, sure. I guess throughout the years, political was one of the riskiest aspects for Latin America. When there are elections, there's a lot of volatility in these markets, and elections don't occur at the same time. So we have to be very careful when elections happen. The nice thing about the region right now is like there's a switch on the political from left to right in most of the countries. So most of the countries that have elections, the center or right won those elections. Countries like Ecuador, Chile, uh, even Bolivia, El Salvador. Now we have elections in Peru. We had elections in Peru, and there's going to be a runoff, and one of the candidates is towards the right who's leading somehow. So maybe Peru will change also the regimen. Colombia and Brazil will have elections before the year ends. So I think this is very important for the region, the change of regimen from left to right and more like proactive. Uh, it's more like a pro market policies that will take. Uh, that that's something very important, and that's going to be for the next 4 or 5 years a very important aspect for the region to continue to grow and show these good results that they've been showing.
Yeah, I think that sounds like a good catalyst, right? A pro-market agenda that really gets the valuations up alongside with earnings, perhaps. One key thing is of interest for me is, are the new candidates now warming up more towards the US than China, do you think? Or how's that relationship going?
Uh, I would say the things in Latin America, you have Colombia and Mexico are always they benefit from the US,
Yeah.
whereas Brazil, Peru, and Chile are more China oriented. That has changed a little bit. As a matter of fact, like 3 or 4 weeks ago, several presidents of the Latin America region gathered with Trump.
Mhm.
Uh, and I think that was a good sign because they want to strengthen relations with the US. I think it's very important for markets that the US has good relations with the US. And I hope that will continue. So I believe all the candidates who are more center or right oriented will look for the US for their support. And if not support, is to see how they can interchange goods and have a better commercial policy.
Got it. And I think you're referring to the Shield of Americas that was announced on
That's correct.
yeah, March
Yes,
7th.
that's what I had. Yes, that's correct. That's what you
Yeah.
do. Mhm.
Yep, I'm seeing here is an initiative that was focused on combating drug cartels, illegal migration, and reducing China's influence in the region as part of the America First security policy. And I think that was right around the time that we met, right? So good timing.
That's correct.
Yeah,
Yeah,
it was in Doral, Florida.
it was 1 week before.
1 week before, got it.
Yeah.
Yes, yeah, I think that'll help with reducing some of the headwinds that have kept investors a little bit skeptical with the region. But political uplift and open market policy is definitely what's needed to fit the bill going forward. Also, doubling down a little bit on the domestic demand, has there been a real domestic growth story? Because we know, a lot of regions that benefit from commodities have very large inequalities, right? Are you seeing an upward mobility of the middle class, perhaps? Companies experiencing that growth dynamics? Is Latin America able to stand on its own?
Yeah, definitely. Well, Latin America has close to 650 million people, or give it or take. Uh, and I think entering 2026, there was like consumption in the region has been growing. The middle class has been growing in the last years. So purchasing power, there was a recovery in purchasing power. Inflation uh, is not the way that they used to be. Latin America was like a two-digit inflation usually, and now it's around 4, 5, 7%, depending on the country. So that helps for consumption for the domestic demand. So I think that has changed a lot, and the the domestic demand is very important for the region. And there's also a change on the digitalization. There's the banks are approaching people with fintechs or e-commerce. So all those unbanked people are also entering into this new digitalization that's happening in the region. And that's driving also the way that the people shop, bank, and that's also very important for the people to be more inclusive in these countries.
Got it. Great. And in terms of, approaching investors, what has the feedback that you've been given, and how has it influenced your process? Because we hear a lot about LATAM and a lot of other emerging markets being under-owned, under-researched, under-allocated for quite some time. What is your approach like, speaking to investors?
I think it's a great way for diversification purposes. I think Latin America, it's playing and it will play a big role. It's going to be better with the time. So I think for investors, they've seen how the returns were last year in emerging markets, and especially Latin America had huge returns. And this year is happening the same thing. One will thought, okay, last year was a good year. Why this year will repeat the same returns? And I think, like I mentioned, valuations are cheap. There's good demographics in the region, switch in the regimen, on the political regimen as well. All these aspects are positive for the region. So I believe investors are looking more internationally first. And
Hmm.
when they see internationally, they can see developed markets, emerging markets. But if they deep more, I believe they can see Latin America, it's a niche place where there's a hidden potential that they should take advantage of. And so, uh, from the talks and the conference at 10, I think they are paying more attention to Latin America. One of the reasons could be like what happened in Venezuela. I
Hmm.
think that opened the eyes for, okay, what's going on in Latin America? Because usually Latin America is just, like I said, Brazil and Mexico for them. And we want to show them that there's more to offer. So what happened in Venezuela opened their eyes and see, okay, what can Venezuela bring to the world? And that was a good sign. So the eyes can be in Latin America again.
Yeah, yeah, yeah. There's a lot of good recent success stories like Brazil and Argentina too, right? Big
Uh,
political
that's
revamp.
Argentina, especially. Yeah.
Yeah.
And then that's a Argentina, for example, is something that we're watching closely. We're starting to enter in some positions.
Ah,
Still, there's a lot of work to do, but I think the first steps were taken.
yes, yes. I remember as a kid reading a lot about the Kirchner regime and a lot
Mhm.
of the craziness. But it seems like that page has shifted, right?
Yeah, yeah. You never know, but so far it's working.
Yes. Good. And then one thing that stuck out to me as we can end here is more about your portfolio management process. I think that's where, a lot of investors might understand a little bit more in terms of they're getting an active management approach. It's not just picking companies, it's putting companies together in a good risk management framework. Talk more about that framework. How do you size positions? How do you, discover opportunities? How do you manage risk?
Sure. Like I said, I think part of the discovery opportunities is traveling through the region, talking to the companies where we invest in. We have one-on-ones with the different CIOs, CFOs of the different companies. So when we like a company, we do a due diligence process that's very due diligent. And as far as we want to be a diversified, even though we talk about for a US investor to have a diversified portfolio, that's why they should look Latin America. Within Latin America, we also are very diversified. We don't invest more than 25% in a sector. We don't go over 5% in a single security. We try to keep it like that because I think it's important to have diversification in a very volatile environment. So we see that as that well. We're very agnostic as far as size, um, country, sector, currency. We monitor the portfolio frequently. It's very important to do that because of the currencies aspect. Currency plays a big role also, but I think currencies right now they offer a good opportunity because we believe that the trajectory of the dollar should be to weaken instead of strengthening going forward, and that's always good that for the region. So, like I said, we diversify within the region, trying to have more countries, sectors, and the way that we manage that risk also is being very careful, uh, especially sizing every company that we invest in.
Excellent, excellent. And lastly, you guys are based in Bolivia, correct?
Yes, correct.
Yes. How is it down there?
Well, it's nice. It's a nice place to live. Very nice place geographically. It has some issues like everyone else,
Yeah.
but I think that's one of the things that we've been living in a country that have a lot of problems throughout the years, and we dealt with them. We know what's going on. We know how to deal with these issues, and that's what we want to show in the portfolio. Like the region is like that. We live and breathe all the political noise, all the political aspects. They are very important. So. Um, uh, that's part of what we do, basically being on the ground. That's what OTG means, on the ground, and that's what we show that other managers might not be able to show.
Amazing. And it's still on my bucket list. I need to make my way to South America. So many beautiful countries and a lot of great friends. So when I do visit, I will let you know.
For sure, yeah, you're more than welcome, and we can have you a nice tour with you.
Awesome. Sounds good. Well, thank you so much, Mauricio. I really enjoyed this conversation. And if folks want to reach out, where would they best find you?
Sure, yeah. Well, anyone that can know more about the region and our products, you can reach us at we have our website www.otgam.net. Uh, so please feel free to go into the website, and you can send us an email. The contact information is there, and we really want to be a resource for all your Latin American needs, and hopefully we can add value to all your needs.
Great. Thank you so much. We'll chat soon, Mauricio.
Yeah, sure. Thank you, Dominic.